When you're negotiating your divorce settlement, there are some things that are pretty obvious in terms of the financial realm that will be most typically included in your settlement agreement, such as how the assets are divided and how much spousal support or child support. But there's sometimes some details that get overlooked that become important post-divorce that really should be addressed in your divorce decree. Today I'm going to talk about the tax consequences, not the actual financial tax ramifications, but how you file your taxes and some of the little issues in the tax consequences that you want to make sure to address. The first is in the case of custody, and that is who is eligible to take the credits for the children. Now the IRS offers some credits there's child tax credits, education credits, there's various different credits that the person who is head of household can take against their income. And so that is an issue. I'm not going to say which way is the right way to do it. I'm not an accountant or a financial advisor, but it is an issue that you want to make sure to address because you're going to eventually be filing your taxes separately, and you can't both file and get the same credits for the children. Only one of you will be able to get those credits. So you want to make sure that that is included in your divorce settlement agreement. The second thing I want to talk about is something called a tax loss carry forward. So for example, one year your spouse's business had a loss and it was on your tax return, but you didn't need to apply the bulk of that loss against income. So you're allowed by the rules of the IRS to take some of that loss and apply it to future years. You kind of put it in a bank on hold. If you get divorced, that loss was there, but now it's only going to be applied theoretically to one of you, or there are some rules as to how it can be applied. But you just want to check and make sure that it's addressed, because if your spouse keeps it all, you will never get the benefit of it, even though you should, because it was a loss that was incurred during the marriage. So you just want to have that detail looked into. And the last tax consequence I want to talk about is a tax refund. Some years you'll file your taxes and you'll be due a refund, but the refund check probably won't come for several months. If at that point you're divorced, I had a client whose ex-wife got the check and deposited it in her own account because it was written to both of them, and he never got the benefit of the tax refund, even though it should have been split between them. So the three things you just want to make sure you pay attention to in your tax documents. One is who gets the advantage of the child credits and anything related. Two is a tax loss carry forward if there are any in your tax returns. And the third piece is if there is a tax refund. Now I'm sure there are more, but those are the three ones that stood out when I've been reading lately. So make sure you pay attention to those. If you want to go into a little more detail about how you can structure your settlement from a point of view that is best for you, if you want some more explanations on a global scale, please schedule a clarity session.